Hello, and today we'll talk about 6 mind-blowing facts about your money that your bank won't tell you. Did you know that your bank is more knowledgeable than you are about your finances? Banks record every financial transaction you make, and they have access to a lot of data on your spending patterns, credit history, and economic well-being. In this video, we'll expose 6 startling details regarding your bank's knowledge of your finances. How well-versed are you in the business policies to which you have donated your money? We imagine banks as locations where our money is secure and where we may go for assistance when we need to make a large purchase. But it would help if you kept in mind that banks are first and foremost companies, and their bottom line will always come first. Although they cannot directly deceive you or steal from you, many banks withhold some terms from you, especially those that might give them a negative reputation. If only the people realized the blatant injustice of our monetary and financial system. As Andrew Jackson once said, it was predicted that a revolution would occur by daybreak, long before the Federal Reserve was established. The banking system has significantly transformed and works even more in favor of the rich. The issue is that most people need to be made aware of how the system functions. People must know how money is produced and how the Fed operates most. The system only benefits a tiny number of people while harming others. Find out what the banks don't want you to know by continuing to watch this video. Here are 6 mind-blowing facts about your money that your bank won't tell you. Please hit the like button, subscribe, and leave a comment before we move on. Let's start now. 1. Banks use your money to do business. What makes people interesting, do you know? Most of us spend our entire lives hunting for work, putting in long hours, and starting businesses to increase our income. Why is this document referred to as money and not something else? The fact that it is a piece of paper with images and numbers indicates that it was printed someplace, which is the most significant fact. Before you click away, it doesn't fall from the sky or grow on trees. You believe you already know the solution. To be clear, it is not the government. In truth, the government borrows money just like you, and believe me, it is far more in debt than you could ever imagine. It may sound unusual, but if the government couldn't create money every year, it wouldn't be able to maintain the nation's infrastructure, bridges, schools, and hospitals. These items are expensive. In the past, money was made of gold and silver. Therefore, you had 2 options: earn them or borrow them from someone else. But in the contemporary world, it functions differently. The government also requires funding. It obtains it as a loan with interest from the Federal Reserve. What source of funding does the Federal Reserve have? It's made of paper and ink. The government then uses that money to construct facilities like schools. This is one method by which money enters the economy. Observe how people deposit government funds in banks when they receive them. The bank then lends it to someone else, so the money travels across the entire planet. This, however, is only a minor portion of how money is made. This is how it goes. Most of the world's currency consists only of computer-generated numbers created by banks. The bank doesn't simply store your money in a safe when you deposit it with them. Instead, it lends it to someone else, earning more money for the bank. But why does your bank account information indicate that your money is still in the bank and available for withdrawal at any time? Considering that banks can lend out 90% of the money you deposit while only holding on to 10% in case you want some back. They maintain your account as though your funds were still present. For example, say you deposit $100 into a bank. To prove that your money is still there, the bank will create an additional $90 out of thin air and lend out $90 of that total. The second bank will get the $90 and keep 10% of it while lending the remaining 90%. Earning more money, and so forth. The $100 profit from the beginning has increased to $1,000. Most of the money, if not all, is made using this method, which explains why 95% of our money doesn't exist. The most peculiar aspect of this arrangement is that the government and banks receive loans for the initially printed money. In other words, the government or banks must return more money than is in the system. This implies that it will never be repaid. Let's take the scenario when there is no money in the system. However, you go outside and request a $100 loan from the Fed. Yes, but you must pay 10% interest on the amount you borrow. Therefore, you must return it and pay $110. The truth is that these pieces of paper are not supported by anything. But we still use them as money because we believe in the system. Consequently, invest in tangible things like stocks, gold, or real estate. 2. Your personal information. You should be aware that your bank has access to and may share some of your personal information with third parties. Although banks must preserve your personal information, they may divulge it to other businesses if compelled by law or for marketing purposes. This indicates that based on your financial activity, your personal information may be used to send you customized advertisements or offers. It's also important to remember that banks can be forced to provide government organizations with your personal information. Contact law enforcement if they believe there is fraud or if the law mandates it. This implies that these parties may access your personal information for investigative purposes. Although sharing your personal information with outside companies is typical practice for banks, it's critical to be informed about this behavior and to take precautions to safeguard your privacy. By carefully reading the privacy policies of your bank and any other financial institutions you deal with, you can accomplish this. You can also refrain from receiving marketing communications by choosing not to receive them. Strong passwords and keeping your personal information private are additional ways to safeguard your personal information. People invested significant wealth in several of these institutions to regain the public's trust in the financial sector. 3. The Federal Reserve's history. The American economy has only sometimes been robust. During the 1800s, the nation faced severe difficulties. The Civil War nearly devastated the nation, and the stock market wasn't functioning correctly. While several European nations have central banks to address financial crises, the United States does not. Therefore, in 1906, a well-known banker sought to increase his profits by driving up the price of United Copper shares and compelling short sellers to purchase his claims to exit their positions. However, his strategy was unsuccessful because the short sellers discovered another avenue to acquire United Copper shares. Due to that decision, the corporation and many other banks went out of business. People hurried to the bank to retrieve their savings as soon as they learned that the bank was declaring bankruptcy. The stock market hit an all-time low. There was no central bank then to restore public confidence in banks. South Wall Street subsequently went to J.P. Morgan. To regain the public's trust in the financial sector, he invested significant wealth in several of these institutions. Additionally, he convinced other wealthy bankers to follow suit. This prevented the economy from deteriorating into a disaster that would have lasted as long as the U.S. had discovered. It couldn't rely on the honesty of the bankers. A central bank that could intervene if something went wrong had to be established. However, it wasn't simply because too many opponents, including politicians, represented their constituents. Bankers on Wall Street and other wealthy people. More than 100 wealthiest Americans gathered on Jekyll Island in Georgia to discuss how the Federal Reserve would operate. The Fed was finally created in 1913, but more than one bank carries out these functions. It consists of 12 banks spread around the nation. Additionally, each bank is required to maintain 6% of its capital in the regional reserve bank. Shares of that bank owned by the bank in return. Essentially, the Fed was owned by the nation's other banks. Since the central bank is the only bank that issues dollars, the system is completely rigged. Every significant bank in the United States is a publicly traded firm. If you buy their stock, you may own a portion of these banks and, in turn, a part of the Fed. 4. Your bank is not in charge of your finances. Most individuals are unaware that banks do not serve their clients' best interests. They want to avoid assisting you in finding the most incredible bargains, paying off debt, or even getting out of financial difficulties. Banks are successful companies that must generate profits for their shareholders. Like any other company, they will sell you goods and services that will benefit them more than you to low interest and maximize their profits. Your objective might be the same sometimes, but only occasionally. Therefore, just because a bank teller is attractive and dressed nicely doesn't guarantee that he gives you the best advice. Before attempting to sell you a service, every bank teller receives extensive training on how to get you to pay. Think independently, wait to sign anything before giving it some thought, and always check rates with different institutions. Wait, we're almost done with this great video. Don't forget to show your support by clicking the like and subscribe buttons. 5. A bank is not a place to invest your money. Some consumers become irate when they observe the current low interest rates at banks. You may hardly ever expect to earn a return of even 1% on a fixed deposit. However, that was only sometimes the case. Lending money and collecting interest was a lucrative business for a while. Money no longer always has any worth on its own, though. Therefore, stop considering banks as tools for investing and start thinking of them as places to manage your money. You might purchase their stocks if you must keep your money in the bank. For instance, Goldman Sachs offers a 2.1% dividend rate, which is significantly higher than its fixed deposit rate. The best aspect is that you won't have to keep your money in the bank since you will also own a portion of the bank and profit if the stock increases. 6. The more money you have, the fewer fees the banks charge you. But since then, money functions have changed when you live paycheck to paycheck. Banks don't think highly of you. You will only be able to give them a little money. The fact that they can only provide you with a small loan and a credit card proves that you are not a valuable consumer. However, the banks will offer you considerably better conditions if you are a billionaire. For instance, in the hopes that you will retain your money in their accounts or use them as your primary bank for your enterprises. This is clear from the fact that the mortgage rates banks usually provide to wealthy people are far lower than the rate Henry Ford offers to the general public. It was once remarked that it is enough for a revolution to occur before tomorrow morning if the country's people grasp our banking and monetary systems. It's critical to understand what data your bank has access to and how it might be applied. You can preserve your financial privacy and make wise financial decisions by being aware of these 6 startling facts. Understanding your bank's position in your financial life is essential. Whether you're trying to raise your credit score, save for the future, or handle your day-to-day money more skillfully. Remember to hit the like, subscribe, and comment buttons if you enjoyed the video. Thanks for watching, and have a great day.